Prayers.
Almighty God, who in your infinite wisdom and providential goodness have appointed the officers of leaders and parliaments for the welfare of society and the just government of humanity, we beseech you to look upon with your burden for these servants, whom you have been pleased to call to the performance of such important tasks in this land. Let your blessing descend upon them here assembled, and grant that they may, as in your presence, treat and consider all matters that shall come under the deliberation in such just and faithful manner as promote your known glory, and to advance the good of those whose interests you have committed to their charge.
Item 2 on the order paper, communication from the chair.
Members, welcome you to this afternoon sitting. Yesterday, I informed you about the death of our former colleague, the Honorable Matthias Kasamba. I will now want to give the details of the funeral arrangements so that members who are able can fit it. Today, Thursday, 29th 21, a mass has taken place at St. Joseph Catholic Church in Ndeva. By now, they ought to have left to Sanje in Kyotera. There will be a mass at 5 p.m. at Sanje Parish in Kyotera. Between 6 and 6:20 p.m., they'll travel home to Katovu. There'll be a mass and vigil from 6:20 p.m. until morning. There will also be speeches during the night. Friday, 30th April 2021, there will be between 7 and 9 o'clock in the morning, there will be viewing of the Honorable Kasamba's body at Katovu. At 9:30, they will travel from Honorable Kasamba's home to the playground. There will be speeches between 10 and 12 noon. Between 12 and 2 p.m., there will be mass at Katovu playground. And then later, burial at Honorable Kasamba's home at Katovu. Saturday, the family and clan members remain in place, as well as Sunday. Members who are able to go should go and support our colleague's family. I also want to take this opportunity, other members, to remind you that starting Monday, we shall convene in the morning so that we can try to complete what is on our docket. So our last effective week of work of the 5th session with the 10th Parliament will take place next week. So we shall reconvene on Monday at 10 o'clock in the morning and daily until Friday of that week. Thank you very much. Go to item 2.
Item 3 on the order paper, statement by Minister on the laying of the host government agreement, tariff and transportation agreement, and shareholders agreement for the East African crude oil pipeline.
Minister of Energy here? You're not here? Okay, let's go to
item 4, laying of papers, the National Payment Systems Regulations 2021.
Minister of Finance.
Madam Speaker, I beg to lay the National Payment Systems Regulations 2021.
The National Payment Systems Agents Regulations 2021.
There are 3 sets of regulations.
So, Madam Speaker, the earlier one was S1 number 18 of 2021. I now want to lay the National Payment Systems Agents Regulations 2021, number 19, and the National Payment Systems Regulations 2021, number 20 of 2021.
Now, members, the same are sent to the Committee on Finance, Planning and Development for perusal and report back. But if any other members have issues or interest in therein, please study the regulations. Item 5.
Item 5 on the order paper, Bill second reading, the Sexual Offences Bill 2019.
Now, I do not yet see the Minister for Justice. Here, yes, Honorable Famudi.
Right, Honorable Gents. I don't see the chairperson of the committee, but they are saying they're on their way coming. I think the technicalities of the first session are now. I pray that we push it a little as we wait for them. We wouldn't want to miss this opportunity this afternoon. Thank you.
Okay, now members, let's defer it for now. We shall come back to it a little bit later. Let's go to item 6.
Item 6 on the order paper, Bill second reading, the Income Tax Amendment Bill 2021.
Minister of Finance.
Madam Speaker, I beg to lay that the Income Tax Amendment Bill 2021 be read the second time.
Is the motion seconded? Seconded? What's the justification?
Madam Speaker, the object of this bill is to amend the income tax cap 340 to redefine beneficial owner, revise the tax rate applicable to individuals and companies for purposes of rental income, provide for a formula for deductible expenses on rental income, provide for incentives to manufacturers to define the date for submitting applications for tax refund, provide for the due date of payment of income tax, to discontinue the concurrent deduction of initial allowance and deductions on depreciation of assets. And we think that this is a bill that will also contribute to our revenue efforts to be able to finance the priorities of the government. Madam Speaker, I beg to move.
Thank you very much. If our committee has completed their report, would we receive it?
Thank you, Right Honorable Speaker. Right Honorable Speaker, the Committee on Finance, Planning and Economic Development considered the bill entitled the Income Tax Amendment Bill 2021 and made the following observations. 1, Clause 2A proposes to amend Section 2 to introduce a new definition of a beneficial owner. This is due to the fact that current definition falls short of the international agreed definition of beneficial owner as per the Organization for Economic Cooperation and Development. Other jurisdictions within the East African region which have adopted a similar definition in their legislation include Kenya. Therefore, Uganda should adopt this definition in order to align with the internationally agreed definition. Clause 2B proposes to introduce a definition of consideration. The purpose is to eliminate any ambiguity as regards what amounts consideration under Income Tax Act. Clause 2C proposes to clarify the definition of an exempt organization to include a religious, charitable, or educational institution whose object is not for profit. This will provide a wording that is clearer than the current wording for the law of the law. The current law provides that the institution should be of a public character, which is subjective in interpretation. Clause 3 proposes to amend Section 5 of the Principal Act, provide that a person who earns rental income from more than one rental building shall account for the income and expenses of the buildings and shall pay tax for each of the buildings separately. Madam Speaker, whereas the proposal is meant to increase revenue raised from rental income by stopping the practice of commingling of income or expenses from one building with another, the proposal is bound to present administrative difficulties since the taxpayers shall have to develop policies for apportioning common expenses to each property. Clause 4 proposes to repeal paragraph Z of Section 21(1) of the Principal Act, which provides for an income tax exemption for agro-processors. This proposal is meant to eliminate duplication of the same exemption because a similar exemption is already provided for under Section 21(1)(AF of the Income Tax Act. Clause 4B proposes to introduce additional sectors to the list of strategic sectors qualifying for the 10-year income tax incentive. Manufacturers of chemicals for agriculture and industrial use, textiles, glassware, leather products, industrial machinery and electrical equipment, sanitary pads, and diapers. This is meant to encourage investment in the specified sectors. Clause 4C proposes to introduce a 10-year income tax exemption for a manufacturer whose investment capital is at least 50 million United States dollars. The committee noted that over the past 3 years, there have been varying tax exemptions to investors. The committee therefore noted that there is need to further study the various tax exemptions being offered to create certainty and predictability in doing business. Clause 5 proposes to amend Section 22(1)(c) of the Principal Act, provide a cap of 60% on allowable deductions in case of rental income, of the rental income as expenditure and losses incurred by a person in the production of such income. This proposal will remove distortions in the rental tax regime which arise from capping the allowable deductions for layer of income of individual rental taxpayers, but allows unlimited deductions for non-individual rental taxpayers. This reform will remove the incentive for individual property owners to own properties through companies in order to claim fictitious deductions. This reform therefore provides for equitable taxation of rental income irrespective of the legal nature of the person deriving income. Where the verified expenditure is below the 60% cap, a deduction will accordingly be granted for the actual expenditure incurred. Where verified expenditure is above the 60% cap, only 60% of gross income will be granted and the excess deferred to be deducted in the subsequent year of income. Clause 6 proposes to amend Section 27 of the Principal Act by substituting for the word "for" with the word "3" as a consequential amendment, amending Part 1 of the 6th schedule. In this regard, a proposal is made to reduce the classes of assets for depreciation purposes from 4 to 3. Clause 6, in addition, proposes a deduction for the depreciation of an asset that qualifies for initial allowance under section 27A1 to be deferred the next year of income. This proposal will discontinue concurrent deduction of initial allowances and depreciation in the first year of use of a qualifying asset. The purpose of this proposal is to make the depreciation deduction regime less generous, increasing chargeable income and taxable for the first year of income in which depreciable assets are first used. Clause 7 proposes to amend section 29 of the Principal Act to provide for deferral of a reduction for the depreciation of an industrial building that qualifies for initial allowance under section 27A4 to the next year of income. This is meant to make the regime for deduction of depreciation of an industrial building less generous, increasing chargeable income and tax payable for the first year of income in which the industrial building is first used. Clause 8 proposes to amend section 50 of the Income Tax Act to provide for indexation in the calculation of capital gains tax in order to account for inflation. However, indexation shall not apply to an asset that is sold within 12 months from the date of purchase. This proposal is intended to reduce the gain arising on sale of business assets by the amount of inflation. This will eliminate overtaxation of taxpayers and encourage investment. Clause 9A proposes to amend section 54 of the Principal Act to provide for preferential treatment of capital gains tax for a venture capital fund registered under the Capital Markets Authority. Venture capital is a form of private equity and a type of financing that investors provide to startup companies and small businesses that are believed to have long-term potential growth. This proposal will reduce the cost of capital by promoting investment into the high-risk enterprises. Clause 10 proposes to amend section 88 of the Principal Act to provide that where an international agreement provides for automatic exchange of information for tax purposes, the Commissioner shall, in accordance with the regulations made by the Minister, facilitate automatic exchange of information. This proposal will facilitate automatic exchange of information of non-resident and resident persons with their tax residence jurisdictions in accordance with OECD multilateral convention and mutual administrative assistance in tax matters. This proposal will further enable analysis of reports on financial account information available domestically with what is submitted in tax returns to ensure proper reporting of financial institutions and their clients. Uganda will therefore be able to access financial account information from offshore financial institutions by exchanging reciprocal financial account data with mutual treaty partners under Section 6 of the Multilateral Convention on Mutual Administrative Assistance in Tax Matters, which came into effect on 1st September 2016. This proposal will be expected to generate approximately Uganda shillings 45 billion in revenue from information generated both domestically and from reciprocal information obtained from treaty partners. Clause 11 proposes to amend section 93A to reintroduce the payment due date for income tax purposes. This provision was previously contained in the Income Tax Act, but was repealed with the coming into force of the Tax Procedures Code Act, and the same was never replaced. This proposal will provide for a due date of filing returns, since the law is silent on the due date of tax payment. The absence of a due date in the law has resulted in two taxpayers taking their time to pay the taxes with no reservations of interest accruing from delayed payment of taxes. Clause 12 proposes to amend section 113 of the Principal Act to provide that a taxpayer shall be deemed to have submitted an application for a refund on the date the application is received by the Commissioner. However, where the Commissioner requests for additional information, the application for refund shall be deemed to have been submitted on the date when additional information is received by the Commission. This is meant to cater for situations where the delay in refund is due to the delay in the taxpayer submitting the requisite documents for verification. Clause 13 proposes to amend section 118B by exempting a person who the Commissioner is satisfied has regularly complied with their tax obligations from the application of section 118B of the Income Tax Act. This is in line with similar treatment of compliant taxpayers under section 1195F and 118A2 of the Income Tax Act. To note is the omission of the time frame in which a commissioner may request for additional information from the taxpayer. Clause 14 proposes to amend first schedule of the Principal Act to introduce the African Export-Import Bank and the International and Union of Conservation of Nature in the first schedule of the Income Tax Act. African Export-Import Bank, Afri-Exim Bank is an international organization whose host agreement with GOU entitles it to exemption. International and Union for Conservation of Nature is an international organization whose members are by agreement obliged to provide it with exemption, and Uganda is a member. Clause 15 of the bill proposes to amend the third schedule of the Principal Act to increase the rental income tax rate from 20 to 30%. This proposal is consequential to the increase in the cap on the deductions from 20% to 60%. In addition, this proposal will ensure that there is no revenue loss from the increase in the cap. Clause 16 proposes to amend the sixth schedule of the Principal Act to provide for 3 classes for purposes of depreciation. This proposal will make the depreciation allowance regime for assets less generous by reducing the rate of depreciation of Class 2 and Class 3 assets other than plant and machinery used in farming, manufacturing, and mining. This will increase chargeable income and tax payable for the first year of income in which the depreciable assets are first used. Additionally, it is a consequential amendment. Madam Speaker, the committee made the following recommendations after scrutinizing the income tax bill. Number one, the committee recommends that government considers review of tax legislation from annually to at least 3 years. Madam Speaker, this is aimed at ensuring predictability in decision-making by investors. Number two, the committee recommends that government undertakes a study of the tax exemption proposals with the objective to establish a criteria in which both international and local companies will be considered to qualify for tax exemptions. Three, Madam Speaker, the committee recommends that the Income Tax Amendment Bill 2021 be passed into law subject to the proposed amendments. Right Honorable Speaker, I beg to move.
Thank you very much, Honorable Chair.
Right Honorable Speaker, I will be laying on the table the copy of the original report after the third reading. It is the same copy I would like to use for the amendments. Thank you.
Thank you very much, Honorable Chair, the members of the Committee on Finance, Planning and Economic Development. I just wanted to know, Chairman, your proposal that the review take place annually, that would mean that the finance bill would come here once in 3 years. Is that what you're talking about?
Thank you, Right Honorable Speaker. What we intend to achieve is that when a proposal is passed by this House, at least it lives for 3 years. The finance bill can always come back, but with other proposals different from the previously amended clauses, sections rather. So in other words, like now, we have a proposal to cap rental income tax deduction to 60% for both individuals and companies. This proposal, if passed by Parliament, for predictability and stability of the businessmen and the investors, we would rather have this proposal work stay for at least 3 years than next year coming to amend this proposal again. That is what the stakeholders are concerned about. Especially this also mainly occurs in investment incentives. We normally do incentives, give incentives and market them worldly. And the investors based on these incentives to come and invest here. By the time they arrive, there is a tax bill, there is a finance bill proposing to amend the decision that some of the investors use based on to come and invest in Uganda, and it is becoming a challenge to them. Thank you, Right Honorable Speaker.
Okay, Honourable members, you have heard the report. Yes, Honourable Ndugwa.
Thank you very much, Madam Speaker. Madam Speaker, I thank the chair for this report, and I'm a member of the committee, and the chair is very much aware that I have a minority report as far as the income tax amendment bill is concerned. And I thought at the end of his submission, if I have the courtesy to welcome me. So I want to know at what point Am I
Maybe you
going
can do
to-
the formal, I can see a copy here, but
Yeah.
maybe you can do the formality.
Oh, thank you, Right Honorable Speaker. I think I want to say sorry to the honorable colleague. I want to apologize. It was an anomaly. It was not intentional. I should have invited him to present his minority report. And in this regard, may I take the honor, Right Honorable Speaker, to invite Honorable Migade to present his minority report.
Yes, Honorable Nduga.
Thank you very much, Right Honorable Speaker. Right Honorable Speaker, I agree with the committee on almost all the clauses on all the proposals, except for the income tax as far as rental income is concerned, and that's the allowable deduction. Madam Speaker, the proposal to have 60% of income from rent as the allowable deduction, if members are to get the impression, it is that if you earn, so 60% is taken to be the expenses. So if you have, if you acquired a loan and you are paying installments, you are paying water, you are paying electricity bills, the assumption is that all of them must fit in the 60%. So 40% is taken to be profit. And that's not the case, Madam Speaker. Madam Speaker, we have to agree that housing is one of the sustainable development goals, goal number 2, as far as the SDGs are concerned. And Uganda is a signatory. Uganda has a housing deficit of 2.4 million. So 2.4 million people don't have housing, and 2.1 according to UN Habitat and the UBOS. And out of these, 24 millions are living in substandard homes. So if we look at the interest rate of the mortgages in this country, ranges between 15% to 22%. So the payback period, as far as rental is concerned, and if one got a loan, is between 20 to 25 years. Therefore, when we have this deficit, the best interest would have been to see how we actually incentivize the housing sector so that we can try to reduce this deficit. Madam Speaker, if we look at among the 50 best taxpayers in this country, as always published by URA, most of them are banks. And most of the earnings from these banks are from mortgages. The others are Tororo Cement. The others are Umeme. The others are Hima Cement, National Water, Roofings, Sadorin, Uganda Clays. So that means government can only try to incentivize the housing sector so that more and more people can buy building materials. At the end of the day, government will have a lot of indirect tax. So our proposal, and Madam Speaker, you have got a copy. My report is signed by 6 members, actually 7 members. My minority report is signed by 7 members. And our proposal is that instead of 60% as allowable deduction, let us have 75% as allowable deduction and 25% available for taxation. And the justification is to incentivize the housing sector so that we fight these slums that are coming up every day. The obligation of providing housing, adequate housing, is actually to government. The teachers are the ones with these rent houses, with their loans, the medics, and other individuals. So, Madam Speaker, my prayer to the committee chair and to the Minister of Finance is that we should accept the 75% as allowable deduction and 25% available for taxation. And Madam Speaker, for purposes of record, this minority report was signed by Honorable Said Abumba, Honorable Katota Atwibu, Honorable Kakoza James, Honorable Wario Mwanika, Honorable Isaac Mulindo Asozi, and Honorable Ruta Maguzi Semakula. I beg to submit.
Very much Honorable Migadde. So now members, you've heard the main report, you have also heard the minority report, you are free to make your comments. Honorable both.
Right Honorable Speaker, given the constraints that we have and the importance of the bills that are going to be considered, seems like hearing the minority and the majority, seems like what would it be proper to further give them an opportunity, just a few minutes to, because it's about the percentage. That's for them to harmonize. Honorable Robert Migadde sounded like is willing, and even the chairperson, they would be willing. I was just thinking whether procedurally you could guide so that
Honorable both have suggested. I'm also of the view that we give some few minutes the two parties to harmonize. Otherwise, I would be in support of the minority report that we allow 75% as deductible income and then subject the 25% where that can be taxed. Otherwise, as rightly stated by the chairperson, we need to give enough time to investors to be able to adjust to the various taxes that come in once in a while. Because when somebody borrows, you need to give enough time to investors that come, that within a certain period of time, he will be paying, first of all, interest to the banks and then taxes. But all of a sudden, taxes are introduced. The business people end up being disorganized. So if these two parties can be allowed, I